All right, everyone. Good evening. Welcome to the Hurley Investments Market View Commentary for Monday, the 10th of October, which I'm pretty sure is today. We're going to do things a little bit differently today. I'm going to start with questions. I'm going to give you guys a moment or two to think of it, partially because I have to get our indexes in here. But what questions do you guys have for me? I'm asking because there were 7 questions that were emailed to me in the last week. So if you're one of those 7 that emailed me a question that I did not get back to you on, I am going to go over that with you guys tonight. But if there are any questions, I'd love to invite you guys to get your questions answered the best that I can. And then I'll go through and I will get the questions that were emailed to me that I did not email those individuals back. I didn't send an email and answered them. I just said, hey, I'm going to get back in touch with you Monday night. I'm going to go through those with you guys so that we're all on the same page and so that you guys get your questions answered. But if you do have a question, let's get it typed in. I see a couple coming in. And let's make sure I've got your guys' question answered so that I don't miss answering something that you'd like to know about. Most likely, if you're asking it, someone else has that same question, and it would be good if we basically answered it for everyone. Plus, I'm just about done getting our indexes all ready to get put in. All right, let's go with questions. All right. So the first question, yes, no one's getting invites right now. I'm working with GoToWebinar to get that taken care of. The biggest problem is they're not recognizing the K Hurley at Hurley Investments email. So we got to make sure that I don't know. They're working to find out why my email is not being recognized, because that's who the reminder return emails are being sent to. So interesting question. And the next one I think is important. And I'm just going to type it in word for word, Dave, just so we're on the same page. Where is the stock market going to go in your not so humble opinion? So thank you very much, Dave. So if we're to look, my thought is we would hit 3,200 before we would hit 4,000 again. And I could totally see us hitting 4,000. And people have asked, well, why would we hit 4,000 on the S&P 500? And the reality is because we are in a supply inflationary environment, not a demand inflationary environment. And that would be my best way to say it, is we are most likely going to go down and hit 3,200, which would be another 10% down. And the short answer is because of that, I'm trying to be a little overprotective than underprotective, which means our rally, our 5.5 point rally, was about the best dead cat bounce we're going to get. And if we take a quick peek, we had 2-day rally up to the pivot point, and chances are we're going to head down farther. The reason why we bounced higher today is basically we had the 3,600, which was a past support level. We had the 3,600 with some buy orders still stacked up there. But those buy orders really ran out today pretty quickly. So my expectation, we're going to set some new lows. Yes, we are. I mean, I guess the short answer, right? We are going to have most likely some type of Christmas rally bounce. It might be a really big one, but we're probably going to be negative for the year. So down to 3,200 and end the year at 3,900 to 4,000. Very interesting comment. So, Abraham, you're asking a question that was also asked by Alan. And Alan, I don't see Alan here today. There's 30 of us. No Alan. Where's Alan at? So Alan better catch this one on the recording. Okay, so I'm going to do this in 2 different ways to answer that question. So Alan asked, and he's a little pissed off at me. Alan asked, why do you always have to seem to be right? And my short answer, you know what? That's not fair to him. Let's just, on the recordings, we're not going to name names, right? So the easy answer to describe on this one is I'm not always right. That's why primarily I do stock ownership with protective puts. And I primarily do the stock ownership is because I can be wrong for a really long time, not lose 50 to 70% in a portfolio, and then, have to start with 30% that needs a 233% return to get back up to 100%. With that said, my biggest mistake this year was following I'm gonna put not a historical. What would you call our bull market? I guess it is historical, right? This is my historical bull market with leap long calls, which are that stock replacement strategy using options when the market turned. Excuse me. That's been my biggest mistake. So those that had leap long calls, a stock replacement strategy, we've been decimated this year. This year, it has totally kicked our butt. Now, with leap long calls, I typically do not add puts because the puts cost a third of the leap long call or half, If you miss those once, it's really hard mathematically to get to profitability. My better trades have been leap bull calls. With the short call on that side that's a credit, that has helped pay for those long positions. So, Abraham, to answer your question, the it would have been better to do a bull call with the long and the short, huge spread. I think on Square we did it at 260 and 400. I did some on Boeing at 260 and 400, 250 and 300, and worked my way down. So there were some definite opportunities, and I would not look to do a long-term debit call spread right now until we hit that 3,200 level. So Maud, great question. And I tried to answer this last week. Do you see any compelling values, right? And yes. And I tried to go over some of those last week. Apple's not necessarily compelling, but Boeing has huge upside to the 400 level. And I'm just going to kind of put these in here. Bank of America, right, has to 55, which were the highs. In fact, I'm going to go on my phone and I'm going to try to do the best I can to, as I sniffle through here, to do the best I can to get accurate 52-week highs that are some that I think are ridiculously good. And someone might say, well, why Boeing? Well, because Boeing right now is trading down at, geez, a crappy level, right? Let me go with Bank of America. I got Bank of America right here. Bank of America is trading at $30.65, closed at $30.66. Its yearly highs, the 52-week high, is $50.11. So $20 on a $30 stock is, for all intents and purposes, it's a 66% upside. Boeing trading at 131.90 today. It was up in a relatively down market. Its 52-week high is 233.94. So just to get to the 52-week high is, almost 100% return. I'm going to stick it in here. 446 is the 5-year high. Probably the all-time high for it. I love this one, Baidu. It's so unique because it's an ADR. It's not a real stock, and people are talking about it being delisted. Baidu really can't be delisted. With that said, it's trading at $114.95. So $115. So it closed at $115.05 today, right? $115.05. 182 is the 52-week high. The 2.5-year high is 354. Some huge upside opportunity. Costco, Dollar General, I'm going to do Disney, I think is a huge opportunity one. Disney right now, it closed today at $95.16. So $95.16, right? Its 52-week high is 179. And its 5-year high, which is about a year and a half, is 203. Just over 100% return for Baidu. Ford, huge opportunity on Ford. Downgraded $11.36 is where it's currently trading at. 25.87 is where we got out of half of the, well, we got out at 25.35, but 25.87 is the full value price on Ford. It has over 100% return as well. Google, I wouldn't say. Intel is a value trap. I do like JP Morgan. I think JP Morgan is a great, huge upside opportunity. The reason why is because the 52-week high is 172 on a stock right now that's trading at 104.99. So again, 104.99, 105, $67. I mean, it has over a 70% rough return to go higher. Meta, I know you guys are going, my gosh, Kevin, get off the technology train, right? Meta closed at 133.79 today. 133.79. 52-week high, 353. $133.79. Closer to 160% return. I think it's huge. Micron closed today at $51.38. A chip company that we don't have enough, right? 150, 51.30, whatever I just said. I changed it, right? The high, 98.45. Almost 100% return for Micron, and it closed at 51.38. Square, small business play, right? Square closed at 56.62. Is small business going to come back? I would think so. 270 is the 52-week high. 289 is like the year and a half high. I mean, we're looking at over a 300% return for Square. I don't think small business is dead. Under Armour closed at $6.94. It lost 13 cents today. So $6.94. 52-week high is $27.28. Over a 200% return there. And then my last one that I'm going to play with is Visa. It's at 182.18. It's a rather expensive one, right? 182.18. Its 52-week high is 236. So if you were to ask me, can't type. So if you were to ask me, the stock market went on sale and everyone ran out of the store. And they're still going to for another 10% down. Pretty amazing. Jamie Dimon expects the market to most likely lose another 20% from here. So a lot of people are going to go, I know the next question, I'm going to get that one. It was the last one. Why don't you go to cash? And there's two reasons here. Because if I'm in the market, right? Can't spell. in the market. I never miss an up day because everyone knows it's foolish to time the markets. And the shortest or easiest way to answer it is because anything I make up on the way down is profit on the way back up. And again, that's going to go back to it's going to go back to two other questions, and I'm just going to keep typing them in, right? Why are long puts important? And I'm going to do this realistically, right? So if your stock, and which one do we want to use? We could do Ford, Under Armour, Disney, Boeing has been there, Meta has been there, Costco has been close to there, CVS has been there, General Motors is there. These are all stocks that have lost 30% or more in the last year, right? Let's say a year and a bit. I definitely think Square fits that group. Visa doesn't. Target has fit in that group. Verizon hasn't quite. So I'm just going to stick with that, right? So if your stock loses 50%, you have a whopping 50 cents on the dollar, right? On a 50% return, what return do you need to get back to break even? Simple question. If you lose 50 cents on the dollar, or you lose 50% of the value of your position, what return from that point on do you need to get back to break even? And again, this is simple math. This is what brought me to do what I do. And in no means am I always right or perfect. So it's kind of funny. I see a couple 100%. I see 1, 2, 3, 4, 500%. I see a 200%. I see a 50%. I see 150%. So the correct answer is you need a 100% return or another 50 cents to get back to the original dollar you invested. It's funny, you're going, Kevin, your typing sucks. Well, it goes behind my go-to webinar, and so I just don't see it. Which is why it is so important to dollar cost average without asking you for more money. And again, if we only have 300 shares, right? 300 shares loses 50%, but I can add 100 more shares paid for. Let's do the math. Every 50 cents, right, invested has a 33% kicker on it, which means, right? If you had 300 shares and you now go to 400 shares, that 100 shares are free and they get that 50 or 100% gain on it, right? You still have that 50 cents, but that 50 cents is multiplied times 1.33. And this is how in year 2020, we went through 46 to like 68% returns. It's because we went through a down year like this, we added shares, boom, when it took off, yeah, the market was up 15%, but we had that extra 33%. And on the low side, people are up 46%. On the high side, people are up 68%. We doubled our values in most accounts. Maud actually just typed a really interesting thing right there, and I'm gonna include it in here. It's funny how dollar cost averaging never feels, and I'm gonna go ahead and put that in quotes, right? Never feels good, and I'm going to change it a little bit, down markets, right? She actually said it never feels good at the time, but I think it does feel good if it bounces up. It just never feels good in down markets, right? It sucks. Your fear is like, damn it, Kevin, it's going to keep going down, right? And I'll put that in there too. Damn it, Kevin. I've heard this out of Maud's voice. It can still go down. So let's attack that a couple different ways. Is the stock market most likely going to continue to go down after it's down 25% or more? Or is it most likely to go up? Elliott wave and Fibonacci's will say anytime you're down 23.6%, it's herd mentality. And to Maud's credit, she goes, hey, I never give you a hard time. She doesn't. I love Maud. Maud, I'm saying this in general, attaching you to other baggage and other people. Again, the whole Elliott wave, Fibonacci, herd mentality says 23.6, boom, there's a big buy-in opportunity. At 40%, there's a great big buy-in opportunity. At 50%, there's a great big buy-in opportunity. So yes, it never feels good, but it really comes down to this: buy low and sell high. You can't buy low if you don't buy low. And Jim Kohler, did you say Jim Bosserman is with you? I have one individual that could not have come in at the worst time. All right, thank you. I've got an individual that came in that I think we hit the highs on Boeing and Apple and Disney. I'm not sure I've got something in his portfolio that we didn't hit a high in, and then it started to fall down. And that poor guy has stayed with me for about a year now, and I know his thing is like, you know what, Kevin, it just doesn't work. And I can show him mathematically, and to his credit, Maud, he hasn't given me any crap either. To his credit, he hasn't said anything. And I can show him these numbers. It's just we haven't gone through a cycle where it's come back. And thank goodness for my gyms, Rich Mormon's been there. And Rich is like, dude, this guy doubled my portfolio in like 2 years. Little bit of luck. Little bit of luck that he brought over some SanDisk and I kept it. Little bit of luck that Baidu ran up. Yeah, I mean, it's just a little bit of luck. And to a certain degree, we always try to tell you guys, you got to give us a year. In all honesty, in the perpetual bull market, you'll lose money with those puts. Sometimes it takes a year to gather some shares, to get a bounce back, and then things take off. I've got a couple more questions I need to answer for you. Why do you do webinars? And really, it's for a couple simple reasons. Number one, I want you guys to know what I am thinking. This is your opportunity on a weekly basis to not have to call me, but to go, Kevin, what is in your head? What are you thinking? What are you doing? This is that opportunity to do that. I hated it not being able to get a hold of my broker. My parents are teachers. So another reason I do this is to teach you what your money is doing. I'm not here to educate you like an education. My job is not to put me out of a job to teach you how to do everything I know how to do. But it is here to give you guys the ability to learn what your money is doing. Most importantly, I like my clients and consider you all friends. Why is that important? Friends treat friends like friends. And I find it important, especially on the down days, to be able to show you portfolios, to be able to show you where we're at, to be able to answer questions. Friends treat friends like friends. And some of you have been kind enough. I really can't take your money. You can't send me a check and say, hey, let me help out with Jared. But I've received over $1,000 of gift cards and Visa cards, and hey, you know, let me give you a little bit of money for taking care of Jared, and dinners at the hospital. And I mean, the outpouring from you guys was amazing. In my neighborhood, we got $1,000 cash in our mailbox. And the comment on it, and this is a couple months after the hospital, the comment on it was, we said 1,000 prayers, and we'd like to give you $1 for every prayer that we said for Jared. We're going to have it's going to be difficult. I will most likely have a 4th to 6th grader for the rest of my life. And the outpouring of love from my friends in the neighborhood, from you guys that I work for friends in the industry, has absolutely been amazing. And one of the things that I learned is when it hits the fan, right? I'm just going to go ahead and say it. When the shit hits the fan, it's not that you have to do something. You just have to be there. In all honesty, there was not a lot. In fact, there was nothing you guys could do. There was nothing that, as much as I love you guys and I can come out, I can do this, there was nothing for you guys to do but to offer some prayers. And I am so grateful for the phone calls and the thoughts. And I consider the stock market as much of the same way. It's your retirement. It's all those years of hard work, like you put in for a kid, right? It's all those years of trying to make this last for you so it can be available for kids and emergencies and retirement and so forth. That I feel like I treat your money like I would treat a child. child of my own. And again, thank you guys for all the respect and love you gave to me. I do these webinars, so on down days, on down markets, on times that are worried, you guys know that I'm not out golfing or farting around, that I'm here, I'm working numbers. I've got Keeve on the phone. Keeve's wife hates me. I don't even want to listen to her when I call in. It's like, just get me Keeve, just get me Keeve, just get me Keeve. I'm talking to Keeve. Don't answer his cell phone. Just get Keeve. We really, excuse me, we really make sure we put in a full 40 hours a week, if not more, just to make sure that we've got every possible angle covered to give you guys the best answer possible when questions come in. Which brings me to my next one. And why do I not like other brokers? And this is going to actually answer two questions, right? Two reasons. Integrity, gotta stop that one. Integrity and ignorance. So in my profession, I see very little integrity. And so there's one of you out there that I'm going to answer your question very simply. I feel that there's no integrity in this industry, or very little. And when you get caught, ignorance is not a defense. It's not. You take tests, you've taken other people's money, you've gotten paid money, you've got paid commissions. I mean, these SOBs are getting at least 3.5% on you guys every year for doing nothing but putting it into something that their sales manager says, if you put X amount of dollars into this, you get a commission. And every 2 years, they churn your money to get their next commission because what they put you in wasn't working. Well, if they'd done their damn research and their homework, you wouldn't be put into that. It will work eventually. There's no reason to book a loss unless something material has changed. And the short answer for the one of you that mentioned recently, hey, your numbers don't add up. And really what that comes down to is at one point in time, I was trying to show, hey, the S&P, like today, the S&P was down 0.75, right? And so I brought up your group here, and we were down 0.27. So on $15.5 million, we're still making up 2/3 of the downward movement, right? Well, someone the other day said, well, Kevin, your numbers don't add up, because they noticed, hey, this number was down much more than numbers that I'm quoting, which is funny because to Russ's credit, Russ sent an email that said, hey, can you explain why your numbers don't add up? Russ, very polite, non-accusational. In fact, I've known Russ for probably going on 20 years now. And you guys always have every right to ask any question you have. But the comment was made, and the message was this: Kevin, your numbers don't add up. You're full of shit. You're down over X% return. You just showed us almost $16 million. 3 weeks ago. And I kind of giggled because I did. And I started to go polite. And when I finally got a hold of this individual, they were really, really rude. And I kind of giggled because I said, you know what? One individual took out $120,000 to help out his mother by paying off his house. One individual took out $130,000 for taxes. Another individual took out $70,000 for taxes. And when it was all said and done, $417 was taken out for minimum requirements, for taxes for those of us that own businesses. Out of my own portion, taxes money was taken out. And so when you add 417 back in, it comes out to like 15,850. And if you do the numbers, we were down almost $100,000 in the last 2 weeks or 3 weeks. And the last 3 weeks have been pretty awful. In fact, one of those weeks we were down 4.5%. Well, I think that's bullcrap. And so we went to withdrawals. And I said, here they are. They're right there. And the fact that he no longer trusted me and the way that he approached me on it, he's gone. And I don't usually ever let people back. And unfortunately, this is one person that I let back. But Lance is gone, and he's gone for good. I don't want to be a no integrity, ignorant broker. And again, to Russ's credit, Russ kind of had the same question for me. Maybe didn't hear everything I said last week. And to Russ's credit, ridiculously polite. The other way, a cussing, swearing individual on the message. I didn't even understand his email. And the first time I got to him on the phone was out of line. So why do I not like other brokers? I don't like their integrity. And I've not picked up money for certain people because they've needed it immediately. The time frame wouldn't have been a way that I thought I could have made them the money that they deserve. I'm not interested in lying. And the neat thing is when you get enough money, when we have this 15, another 10, it's really simple just to say, you know what? I'm good. I make enough money. I do mine. If I never picked up another penny from anyone, I'm going to be okay. And I don't need those people anymore. So it's been kind of fun over the last couple of years to shed the 2% that take up 200% of your time. If at any time, for whatever reason, you feel I haven't shown the utmost integrity or honesty with you, there is a way to question me on it, but there's also a way not to question me on it. I'm an open book. I can show you anything you'd like to see. And I'm going to do my best to make sure that you guys know exactly what we're doing and why and how we're doing it. I love showing you guys days like today, right? A 0.27. That is an awesome set of numbers. If I brought the other money in, give me a second. I'm going to pause the screen so I don't show any personal numbers. The other group, which is not your group, which is not my education group, little worse. The other 10 million, I was down 0.29. I'm mimicking everything. It's much the same. Everything is still in there. And what I'm doing is trying to be as open as I can be so that you guys know what's going on and why. This question, do I really run all those calculations? And the short answer is yes. For years. And another one actually people ask me on is, do I really run, do I really still use a notebook, right? And it's like, yeah, I do. And for the life of me, I thought I had it here and I don't have it where I thought I had it. Let me see if I can find. Dang it. I don't have what I'm looking for. So the short answer is yes, I still use an at-a-glance notebook. I still schedule and write off all the things that I do. I buy 2 packets of those yellow notepads, which I think is 20 times 200. It's 400. It's 800 pages of paper. I go through 800 pages of paper. Worth of taking notes front and back. So it's one of those things that's somewhat easy to be able to do. So the short answer is yes. And I think I've got 2 other questions that came in from you guys. Do you ever see soft skill items like emotions drive more of the market than technicals, especially in flat markets? So yes, in fact, if you ask me, the whole market is emotional. And some of those emotions are guesses, right? It's blindly following others. It's fear. It's greed. It's worry. It's bad timing. And all of them are ways that people blow it. It's funny. Crutches, right? Crutches, things that don't help you. Why can I not spell crutches? Crutches. Things that truly don't help you in the stock market. Education. Just because you take an education doesn't mean you got it. Doesn't mean that you can take the time and spend the time and the hours upon hours upon hours to master it. This really bugs me. Apps and algorithms. To think there's a mathematical equation that predicts the future is stupid. It's ridiculously stupid. To think education and someone's doing these 1,000% returns, they would be a billionaire a couple times over. Easy, picked up by JP Morgan or a whale. I've had some of those talks with those guys. I've had opportunities that I just didn't qualify for to trade hundreds of millions, if not billions of dollars because of my results. I'm going to go back to integrity. 3 or 4 years ago, I could have been making easily on $250 million. I would be making over $5 million a year. But they wanted to tell me how to run the business, which is scary in my business because if I start doing what other people say, it's still my license and I'm the one that's responsible for the results. Talk about it, come to Jesus. It sucked to give up the opportunity to pick up $250 million. But I was not going to risk going to jail for 10 years for each offense for the BS they wanted me to do. It bugs me. I'm going to go ahead and I'm going to say this one. Technical, green, red, what do they call them? Flags, checks, green, red, buy, sell signals. VectorVest got huge fines for their crap. I'm shocked at people that buy programs that will do their technical analysis for them. If you can't do your own technical analysis and you don't know a buy or sell signal, buying a program to do it for you is ignorant again. This is what the crutches in the education are. I could list others, but I'm going to kind of hold off here. But it bothers me because mentors, garbage, right? Floor brokers. Someone recently asked me, Kevin, what do you think a floor broker is? And Maud, I'm going to apologize. Mary, I'm going to apologize. Wendy, I'm going to apologize. Going through, you got 30 of here. SS, I think you're Susan, so I'm going to apologize. All a floor trader is a big stock brokers company's bitch. He gets a phone call in the morning. He's told what to do. He's told how many shares to buy and sell, and he has to do it. That's it. There is nothing special about a floor broker. He's told what dollar figure to buy it in. He's told what dollar figure to sell it in. He is someone else's whipping dog, or as I just said, I apologize. That is what those people are. And it's shocking how many of these floor traders, I've been a floor trader, are still looking at education. And when you look at real returns, they're awful. There's nothing that a floor broker does other than knows hand signals that is any benefit in the stock market at all, is any educated or smarter than we are. Obviously, I'm not happy with floor traders. It's a false sense of security. Had shares, you're all time, biggest mistake, why do webinars, why are long puts important? All right. Any other questions that maybe you guys have that I need to answer for you? Again, I got like 5 emails, 7 questions. There are some good questions that came in today. But yes. Okay, here we go. While you guys come up with any more questions, Alcoa on the 17th. Earnings is coming up next week for banks. Bank of America on the 17th, JP Morgan on the 14th, Lockheed Martin on the 18th. So we have earnings starting to come up. Earnings season technically starts with Alcoa. We're going to couple run of banks, and then we get a run of everything else. Usually, 63 or 4% of all the earnings come in a 3-week period of time. A lot of our earnings are coming next week and then the last week of October. So we need to be ready. We're going to protect them, and we're going to move protection down to at the money. We're going to book some profits because a lot of companies can get some big bounces higher because of how far down they are. Just so you guys are aware of that. Big picture I thought was interesting. It really came down to, again, the last paragraph. And really, the short answer is coming down to we're probably going to have farther down than up. As earning estimates get marked down, we're going to see one of those low tides sinks all ships. So even if we do get a bounce this last quarter, you've got to be smart and you got to be ready for it. Big charts said exactly the same thing. Big charts, as you go through what they're going through, their expectation is, hey, we're going to get a pause sometime, but it won't be a long pause. It won't be a material pause. Earnings are going to matter. Taking a look, we're probably going to be oversold for a while. Let's see if we touch 28,700 on the Dow. 3584 is the low. We fought 3600 today. I believe as I looked at the futures actually look like they were up earlier. They are up, but they're up slightly. They're flat right now, 0.06. So 6 100ths on the S&P, 16 100ths on the NASDAQ, and 3 100ths on the Dow. I would expect that we're going to go lower going into tomorrow's open. We're going to test the 3584. Chances are through earnings, if earnings are as bad as the expectations are, we're probably going to go touch 3,200 for a rip your face off kind of rally towards the end of the year. That rally is really 100% dependent on the Republicans taking the House to create gridlock, and so they don't have to fund executive orders. All right. Not too much by earnings this week. We get the start of banks. We actually get JP Morgan on Friday, Citigroup, Morgan Stanley, US Bank Corp, United Healthcare, Wells Fargo. Thursday, we have BlackRock, Delta Airlines, Fastenal, and Western Boot Alliance. Pepsi Company is on Tuesday. Economic reports, inflation numbers Wednesday, Thursday for PPIs and CPIs. Retail sales on Friday. None of it is expected to be really good. So you'll notice we have extra puts on shares. We've got SPY puts in place. We're ready to add more of both. Last week we had a big reversal, and one of you asked me what happened, and I didn't know. I had no idea what it was, and I think I found it. A giant options trade kept the S&P afloat after a big down day last week. So here's the article on the question was asked, Kevin, why did we get such a big reversal? I couldn't figure it out last week. I'm going to say this was the reason here. So please read through. It's just a big options bet that may or may not be profitable for the guy. Interesting to see. Shaky market bowing towards key tests with bank earnings, inflation data on deck. That's coming up this Friday. This Friday will be a huge day to see where we're probably going to go through October. I also listed all of our earnings and economic reports are listed here. I thought this was funny. Think about stocks whose profits grow even as rates rise, Bank of America says. And they did their scanner for a couple of these, you know, Charles Schwab, PayPal, Progressive Health Equity. So I went through my numbers, right? And I went through some of what I'm looking for people that still grow in these type of environments. Apple doesn't need to borrow money, still grows on its cell phone cycle and its computer cycles. Boeing, 9.5-year back order on their planes, it still grows. Bank of America, It actually does better with higher interest rates, primarily on its investments and its lending. Baidu, not important. It's the Chinese Google. They have their hands into everything China. It grows as China grows. Disney, people still go to movies when they're allowed to. They might not do as good as their theme parks, but they now have their cash cow of Disney Plus. They don't need to borrow money. They're cash rich. Ford's an interesting one. Ford runs their own cash service for their cars. If you buy a Ford truck, you're primarily doing the first 6 months to get their cash bonuses through Ford Finance. Ford stays really good and is cash positive through interest rate hikes. Google L does fine during cash because it has cash and because it can get through rate hikes. JP Morgan, same thing, it's a bank. Meta or Facebook, cash rich, interest rates don't hurt it. Micron is a little bit of an interesting one, and I had to go look at it. That's why I had Micron and Under Armour here. So let's go to Under Armour really quickly because I was worried about Under Armour, right? Their book value is 3.77 and their cash shares are 2.36. Right now, they are sitting at a ridiculous screaming buy. They have cash on hand, if everything was to be liquidated, of 2.36. If you even took buildings, each share would be worth $3.77 on a stock that's trading at $6.94. Under Armour, resistant to the cash flows. And the other one I was looking on, what I just said was Meta, right? Was it Meta? Was that the one I just, Micron. Micron, is Micron going to be a cash cow or are they in trouble, right? Their book value, if they sold everything, is $44.32 on a $51 stock. Their cash per share is $8.98. Their debt to equity in a very materialistic, a capital, high capital or high material investment type of company is ridiculously low. P of only 6.64 in a high 40s PE multiple environment. Micron is one that should triple overnight. I like the stocks we're in. It fits this criteria a crap ton better than Charles Schwab, Health Equity, PayPal, and Progressive. What a joke those ones are. Very interesting article came out yesterday about inflation, and earlier on, let's face it, he knows it all. I'm going to skip this one really quick. HP, Lenovo, and Dell see PC shipments continue to decline in Q3 while Apple bucks the trend. Yet we just had articles last week, and I told you guys, my numbers don't show it. I didn't see the hit on Apple last week. It's because it's not there. Apple saw PC shipments rising 40% in the third quarter. Yet last week we were told Apple needs to be downgraded. Channel checks, hey, they're not getting it. My channel check, it was 8 weeks for me to get an iPhone 14 Pro. And now, this week, all those dummies that wrote those articles last week are got to be going, oh, I can't believe I did it. The PC shipments rose by 40%. My last article, which I just thought was interesting, I don't know this person at all, but I spent 5 years interviewing 230 millionaires. Here are the 6 habits that make them ultra wealthy. This is kind of my self-help, right? Self-help millionaires are constantly learning. I don't know if I'm learning. I read everything. And when it comes to learning, I have spent probably over $100,000. There's not an education out there that I haven't spent time or invested in. Everything. I've just spent money everywhere. So I'm trying to do my learning without just jumping ship and changing everything, because that never works either. Self-made millionaires listen more than they talk. They build great teams. They dream big. I still got my 1,000-acre ranch as one of my dreams. Self-made millionaires prioritize their health. This is probably my weakest one I do. Self-made millionaires make their own luck. I agree with that one the most. If you put the effort in, your luck or your reward's going to come down the road. It's there. Absolutely love this article on just ways to look at yourself to help yourself become a little bit better. Any other questions you guys have that I can answer for you? I know I went way over today, but are there any other questions you guys have that I can answer for you? What's wrong with mentors? Some are good. Aren't you my mentor? The problem with mentors is, again, mentors use other people's money instead of their own. I would much rather have a partner who's actually doing it versus someone that thinks they know how to do it or they've done it in the past and they're now trying to do it for you. If there's no skin in the game, then they're not there. A mentor, again, is using your other people's money or your money instead of their own. The best mentor that I've ever had was a business partner that had skin in the game, and they were in it just as much as I was. So maybe it's a play on words there, Russ, but if they really gave a damn, they'd become a business partner. All right, are there any other questions? Am I looking to add more companies to your portfolio over the next month? I'm not sure yet. It's a pretty big list right here. I know I'm lacking energy. I know I'm lacking healthcare. But the opportunity is pretty big in a lot of these names. So, Jose, right now, the honest answer is probably not. No, I don't actively trade General Motors. I just pay attention because I actively trade Ford. No, I don't actively trade Microsoft. I just pay attention because I actively trade Google and Apple. So I should add Google L in here, just as a heads up. With that said, we did let Google L get called away. We did let Visa get called away. My best answer for that was Visa. We forgot about options that were expiring. I actually had it listed on the wrong day. So Visa shares got sold off at 210 and 215. Google L's next earning date is 10/25, and we were new to Google. We had 200-300 shares for people, and to be honest with you, it's been a little volatile since the split that I haven't gotten back to Google L. So we let that get called away. Excuse me. got called away at 114 and 118. And it's currently trading at 97.86. It didn't get called away, it got put to someone. We had long puts in place. Long puts assigned shares to other people at a much higher price than the stocks are currently trading. Again, Google L, 118, 114 are where stuff got sold, currently trading at 97.86. Visa got sold off at 210 and 215. And Visa closed today at 182.18. Jose, the short answer is Jeffrey Dunyan was a huge influence, and Safe Option Strategies was a huge influence on managing money. I'm basically doing those strategies and learn through him. I have found that I do not go way out in time and have a short call pay for a long put because my clientele wants to see the growth in the stock. And also, if you go way out in time for that long put, for that short call with the long put for the ultimate caller trade, then you, for all intents and purposes, you can't make money your first 2 or 3 earnings that you go through. That short call just takes away so much of that upside opportunity with the cost of the puts. I'm also not much of a spread trader. I primarily do leap long calls. The spread trading, I just don't do it nearly as well as Jeffrey Dunyan does, and it pisses me off. I hate losing, and a lot of those trades lose, and that's who I am. Hopefully that helps you out. I do and I don't, but not usually. When I hear someone talk, they'll use a short put strategy. Most people are like, hey, I'm willing to own the stock at that price, and I want the credit, which is, thanks, Bill, which is a little interesting because if you're willing to own the stock at that price, why the damn stock? And why would you want just the credit? Who wants to make 50 cents or $1 when you can make 10 or $20 on the stock? I don't trade for small credits. Jose, we're in this to make crap tons of money, to double portfolios every 4.5 years. And we're not interested in a credit on a short put because everyone's okay owning the stock when it's trading much higher than a short put strike price. Short puts have decimated people's portfolios this year. Nothing like getting a $1.50 credit when the stock loses $25 of its value and you got to buy it back for a $25 loss on the position. Jose, I'm going to give you my phone number. If you would like to, don't hesitate just to give me a call tomorrow, and I will try to go through probably more of these questions that you have, but I'll be able to do it more one-on-one with you if that's okay. And I just sent that to you. Hopefully you can copy that and write that down. All right, any other questions, guys? If not, I appreciate you being here today. Thank you so much. It's been a wonderful evening, way later than I expected. It's 7:17. Never happens this late, but guys, have a great evening. I'll try to do the best I can to get this posted as soon as possible. Take care, guys, and have a wonderful evening. Bye-bye.